Hi, thanks for tuning in. This is a weekend review for the week ending October 21st, 2022. We're looking at a chart of QQQ and SMH weekly. I'd like to point out the Demark TD9 13.9 setup on the Qs. The last time this happened was the lows in 2017, and you just had a TD9 buy setup then. I can go back to the beginning of this bull market and you've never had a 9-13-9 sequential setup. So what that's telling me is to take note. You have increasing bull volume. You have 3 closes below the 200 and a capture of the 200 and the 5. This is a change in character for the Qs. It is of note. It is very important. You have a bullish divergence and you have increasing bull volume and decreasing bear volume. Taking a look at SMH, you have a similar setup, but this is just a TD9 buy setup, not a 9-13-9. And you still have this positive momentum divergence. No recapture of the 200, no recapture of the 5. Taking a look at the ES had a chance to pull a 9 buy setup, but closed above the candle from 4 weeks ago on 9/19. Which was that 371150 level that I had talked about. That being said, you've still held the 200 and captured the 5 on increasing bull volume. And if you go back to the lows from COVID, you basically have the same amount of bull volume, 12.9, 11.8. And you have positive momentum divergence and a capture of the 5. That is bullish. It is not bearish. Take a look at IWM. Similar story, increasing bull volume on the weekly, a capture of the 5, still a rejection at the 10, no capture of the 200. So this is definitely the weakest now, but you still have this double bottom setup. So double bottoms and double tops are some of the most reliable topping patterns. They're very easy to see risk reward, very easy to identify where you're wrong. I'd like to take a look now at TNX. And she just negated this bearish divergence, 372, 387. Let's take a look at the RSI. 79, 78. Okay, so RSI is still showing a bearish divergence, while MACD is not. But I will say, just from a trend standpoint, this thing looks done. You don't take positions at this point in the channel. This is where you sell. Just how I view that. That is my take. So again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 green weeks in a row. I have not seen 12 green weeks at all on this. And if you zoom out to the monthly, you've got a 994. So it's possible this thing could go for 5 more months. 1, 2, 3, 4. But if she closes below 30, it would negate. Now I don't see that happening. That's a big drop. She's still above the top of the monthly Bollinger Band, above the top of the quarterly Bollinger Band, and the quarterly is showing me the 8th quarter in a row of increasing price. So Q1 of next year rates should top, and that's at the very latest. The question is from where, and that is the $1 million question. Right now, I don't see risk reward favoring bullish entries here on TNX. And if you look at the bonds, it's same thing down here. I don't really see how you can take a bearish entry at this point in the trend. You know, you pretty much are at that support line in this descending channel. All right, and descending channels are what I call the going to zero patterns. They basically, you know, these are avoid patterns. You don't want to be anywhere near these. You want to be in TNX, right? This is a going to infinity pattern. This is a going to zero pattern. It's very clear. You can look at them side by side, negatively correlated with each other. Let's pull up the dollar. So the dollar is topping. This is a fact. I know people don't want to hear it. It's happening. It's had the Kiss of Death, the Barron's article, front page of Barron's. You got the 9-13-9 sell setup, and now you've started the buy setup, the buy countdown. This is just week 1 and a loss of EMA 5. So that is a bearish setup. Now again, you're still in this ascending channel, and until you close below the 10 and ultimately close below 109, this thing is still just technically a bullish wedge pattern. That being said, I'm not touching it. I don't like the way this looks at all. If I were bullish the dollar, I'd be very, very concerned. This is pointing down, accelerating lower, and the histogram's negative. This is a bearish trend on the daily. Okay, so now let's zoom into some stocks that I'm watching very, very closely. NVIDIA is one of my favorite setups right now. Has the 9-13-9 buy setup, a capture of EMA 5, still below the 200, and that's okay. Still in this going to zero pattern as well, and so technically, what would it take to get very bullish on this stock? Is she'd have to get outside this descending channel. She'd have to capture the 5, the 10, and the 20. So far, she's just captured the 5. So this is very, very early. And you still have plenty of time to enter this trade or exit this trade if it fails. At this point, I don't see the stock going below really 115, which is the quarterly 20. And that's one thing I did want to focus on before we get moving too far forward. There's a monthly gap on this chart at 106 right here. And the high from back here is 73. So as long as she stays above 73, technically this could still be some large wave 4. I'm not going to get into that. But what I will say is she's at the monthly 50. This is a TD9 buy setup on the month. 1, 2, 3, 4. And as long as she closes below 150, 159, it will validate. And again, you don't get these often. Actually, you rarely ever get these buy setups like this that are on such long time frames. So this is something that you should definitely be watching and taking note of. Let's go back to ES real quick before I go down. Same thing here. For ES, it's 37.81, and you just count back 4 candles. Must close the month below 37.81 for this to validate. Closed the week at 37.72. And let's take a look at the quarterly. Coming into the quarterly 20. So this is a huge level. And this is, again, people want to say, is the secular bull market over? I cannot support that claim until you lose the 20 on the quarterly. If you're talking about a bull market that's been going on for 40-something years, it's really clear when they lose the quarterly 20, it's over. All right? So that's my line in the sand. And that right now is 34.27. And again, they could go down there this month. They could definitely get down there this month. And from the daily standpoint, this entirely could be an expanded flat. One of those things that you see all the time. But here, here's what I want to point out. That's way more important than whether or not this is an expanded flat. That momentum and that histogram are positive. It's captured the 20. It was rejected at the 20 for 2 months. It's now held the 20. This is a bull flag pattern. The 10 is about to cross through the 20. The 5 already crossed through the 10. And PPO is positive. That's a bullish trend. That's an uptrend. Okay? You've put in a series of higher lows and higher highs. Well, not yet, but about to. The point being is that if you look at this quarterly trend on all of these charts, and we'll just keep going through the ones that we already hit, this is at a rising 20. Look at that. It tagged the 20 to a T on all of them. IWM closed below, recapture, that typical trap look. SMH right at the 20. XLF right at the 20. IYT, the transports, closed below, right back at the 20. So this is a rising 20. This is an uptrend. Even on the weakest stocks, it's an uptrend. And this trend is likely to continue a lot longer than most people want or think it will. All right, so let's go back to the stocks that I like right now a lot. Nvidia is number one. Number two is Crocs. Crocs has already bounced from the 20, has already broken above a couple quarters ago. You look at the monthly setup, right into the monthly 50, now bouncing, bull flag pattern, trying to capture, trying to retest 99. In my opinion, this has a path easily to 100. And you look at the weekly, you had your 913 buy setup. You've got price in that bull flag pattern that we talked about. The 5 crossed the 10. PPO almost above 0, which is a very, very, very important development. Just like when it went below 0 here, you had a lot left in the downtrend. If she can get above and stay above 0 with this PPO configuration, you have a lot more in this uptrend. And really, it could be going back to test all-time highs. You look at the daily. This is a textbook inverse head and shoulders. Okay, the symmetry is beautiful. The time on the left shoulder here, 50 bars. The time on the right shoulder, 31. So it could definitely go a little bit longer. I mean, maybe you could view it from back here, 40. Either way, it's got about 10 more bars before you're going to see a break of this range. And right now the range is 66 to 84. The way I'm playing this is I've entered back here. I've entered down here. Any weakness at 66, I take. That's a buy. The bands are now curling up. And the 200, the 50 just crossed above the 200. That's a very, very bullish development, and this is something that you definitely need to pay attention to. ENPH is another one. Okay, ENPH has been a lead for me for a long time. Still, this bull flag pattern is appears to have broken down. Just captured the 10. PPO curling up. You look at the weekly, closed below the 20 just to capture it again. You look at the quarterly, did not close above the 282 high, which I really would have liked to seen, but this quarterly momentum in PPO or MACD are telling me that this can continue a lot longer than most people think, and this is still just a bullish pattern. You look at the monthly chart, and you see that we've just pulled back into the 5. And if you really want to get into the pattern here, this to me looks like a zigzag. All right, zigzag. And I see wave 1, wave 2 here as a flat, wave 3, wave 4 as a zigzag. And as long as it stays above this high here, 218, 217, that general area, it's obviously subjective. But as long as it stays above that, you have yourself a very, very bullish setup, challenging one more all-time high. So right now, ENPH, Crocs, Nvidia, and the final one is Netflix. Netflix just captured the 200. This is very, very important. If it can stay above the 200, even better. If it pulls back into the 10 to the 20, it's a stone cold buy. This was the breakout area right here. This is the gap that was left open somewhere up here at 350. What is this? 351? No. 348.61. And this is obviously a huge base. This is what you want to see. You want to see decline, price declines for a very long time, and then you see a large base. And now the monthly is in a TD9 sell setup, meaning that this is just month 3, and it's also an outside month. It tagged the previous lows, 214, went down to 211, now back above and looking to capture the 10. So this is very, very bullish in my opinion, and Netflix appears to be the lead dog heading out of here. It was Tesla, and I don't see Tesla performing that well here. Again, look at the MACD cross, look at the difference. This MACD screaming higher, momentum screaming higher, and this is bull volume. This is accumulation. A close above the top of the weekly Bollinger Band is a breakout, and it did it on volume, and the target right here is 355. That's the play. I do believe Netflix is still the play, and I do believe the cues with the Demark setup that they have this week is very, very, very important. It's not something that you ignore. And we don't, we don't really have the bonds signaling yet that it's all clear. And I will say that, I'd like to see ARK confirm the other indexes. I've seen the transports confirming, right? The transports are capturing the 20. That needs to happen. The weekly, though, is not confirming yet. Okay, and this was my lead tell that the bull market ended in 2021 when we came back here in November and did not set a higher high. This is essentially a double top and has been struggling ever since. Now she's got positive momentum on the weekly, positive divergence on the weekly, histogram curling, but we are still in bear territory here and cannot get above a declining 5. So this is a red flag. And if you look at the previous all-time high, this to me looks like a rejection at the previous all-time high. And what you really, really, really want to see is all of this hold. All of these participants need to be in the money. All right. And you're only on over here month 7 of the buy setup. So it's but MACD has reset to 0, which is what you want to see. And if you go back to all of these, that's generally what happens is price gets way extended from mean and momentum gets way extended from mean, and you get some reversion to mean, right? Back here, this was a rising 50, the reversion to the uptrend, the longer term trend line, and momentum reset to 0. Right here, we've got the reversion to the longer term trend line and momentum has reset to 0, but we have not seen anything flip up. And so with all of these indicators, whenever you see extreme bearish sentiment or extreme bullish sentiment like TNX, what you need to see is for it to flip down. When momentum flips down, that's when you know you have a high or low to trade against. And until that happens, you have to be skeptical. And so I will take a look at a couple more indicators here. So personal savings have evaporated. This is definitely a problem. Definitely a problem. AAII, persistent pessimism. Line shows a percentage of time over the past 40 weeks with AAI bears greater than bulls. You've had 1 week all year where bulls were greater than bears. If you look at the longest run of weekly 10-year yield increases since the 1980s. You got to go back almost 50 years to find rates going up this fast. And generally speaking, with any move, when you do get 12 in a row of anything, down or up, it signals exhaustion more than it signals a breakout. Calls are being used to hedge upside while puts are quickly monetized trading as part of put spreads instead of outright. SPX out of the money call volatility relative to put volatility, skew approaching bottom panel as flat as it's ever been. This is flat as it's ever been. If you look at Bank of America cash survey, this is the highest level of cash. Highest, going back to the dot-com crash, exceeding the 2008 great financial crisis. If you look at investments in stocks and bonds, commodities, and real estate, essentially as low as it's been in the last 5 years. Net speculative options premium near global financial crisis panic. So there's a lot of signs that are telling us to be open-minded to a turn. Pessimism is at an extreme level, objectively speaking, and a lot of these charts have had their momentum reset to the 0 line and price reset to a rising quarterly 20, okay? And the quarterly 20, just like in the COVID panic, they could slice right through it, go to the 50. They could do that here again. But the idea is, why can't price just stop at the 20? And it can. Okay, and why does it have to stop at the 20? It doesn't have to. I just want to keep an open mind to all the possible outcomes here. And when I look at things like the Qs, which basically have never touched the quarterly 20, right? Going back to the beginning of the bull market in '09. You've never touched the 20. This is the first tag of a rising 20. I would say you would expect a rally from here. This MACD is telling me, though, that that rally is likely to be sold. Even a rally to 318 or 364. So, at this point, the risk is to the upside. But coming into next year, it's entirely possible that this was just the start of a much larger correction lower. Okay. And how low, we have no idea. But I will say, across all these time frames, you've had the 50% correction. You've had the 61% correction. Okay. If they don't rally from here, they're going for a much deeper correction. And I'll just end with that. I hope you like the content. If you like the video, hit the like button, subscribe to the channel, share it on social media, and I'll see you next week.